All right, okay, let's do this. Welcome to the closing beat, everybody. Happy Wednesday. How you doing out there? All is good here. Well, all was good till old Uncle Jerome came in and, or we call him Uncle Powell around here, ruined it. Ruined the market's momentum. We call him Uncle Powell because, I don't know if you know, but Eric's last name is Powell. So it is his uncle. You know, they don't get to talk much. But Uncle Powell, man, couldn't give us the heads up there. He's going to ruin this whole momentum here. As you probably know, it's Fed Day. And we got the typical movement, at least to start, for the Fed announcement, and then just kind of fell apart through the rest of the day. If you are not sure what's going on, the Fed raised rates 3/4 of a point, so 0.75%. And the goal was we were looking for them to say, hey, we're going to slow things down. We may slow things down. Well, he did, but he left a lot of room for, man, if we need to go gangbusters, we will. I didn't see much in the initial release of the notes that indicated what, that market took off, and it was like, I don't know, I don't see that they're really saying they're going to do some slowing down of rate hikes there. A couple notes there. They kept saying that we were highly attentive to inflation risks. That's actually a hawkish comment or a more aggressive comment, because that means that we still see the inflation risk there. We're going to be attentive to them, meaning we will raise rates further if we have to there. And the market kind of took the initial statement. Pop over here. We'll go to the 5-minute. The market kind of took that initial statement as, hey, this is pretty good here. The main thing that everybody focused in on, and you can actually time the movement in the market to the release of that statement there, they said, we'll take into account the cumulative tightening of monetary policy, meaning we'll take into account the total amount that we've already raised rates, that lags with monetary policy affects economic activity and inflation. In other words, they're saying we have to take into consideration what we've done so far and realize that we won't see the effects of it for a quarter or two. If they could just use plain English, that's what they would use. And they will also look at economic and financial developments, meaning like we just had today and yesterday, we had some economic numbers come out with jobs that were really good. That's not what we want. We want to see some weakness there if the Fed's going to slow things down. They're trying to weaken everything, right? So it's not a bad thing if these Fed hikes actually slow down job creation, slow down, maybe the job markets in general, the housing market, of course. And, initially, I think the response was, okay, cool. That means that they're taking all that into account. But by taking into account the cumulative tightening of monetary policy, that's a fancy way of saying we'll take into account what we've done already and see if that's good enough, right? And so the markets, I think, moved higher based on that news. But, I was excited to see that. I just thought there would be a little bit more. I'm not a Fed expert in any way, but I just kind of thought, there'd be there. So anyways, we look towards the Fed conference, right, where Jerome Powell comes out, starts talking and everything. And he kept leaning towards, they were picking on him for some questions about, will you pause? Will you slow things down? What are you going to do? And his comments were really focused and summed around the first statement that he gave. In other words, he wasn't willing to budge. He had come into that knowing what he was going to say. He says, we still have some ways to go. In fact, he said that multiple times. We still have some ways to go, and incoming data since our last meeting suggests that the ultimate level of interest rates will be higher than previously expected. Ooh, that's basically him saying that the data is showing we can keep going, right? There's no reason we can't keep going. And so it becomes very clear at that point when he says that, and that's where the market goes, whoop, we're going to go the other way. That took all the steam out of the market, literally word for word. That the market moved right along with it. That makes it clear that the interest rate hikes are not going to stop. The pace of the interest rate hikes may stop. Remember that? You guys remember when inflation started peaking or started going nuts there? And they kept saying that that inflation was transitory and all that stuff. Well, what they were saying and later had confirmed was, oh, we didn't mean that inflation itself was transitory. We meant that the pace of inflation was transitory, meaning it won't keep going up at that speed, but yeah, it's going to stay high for a while, right? So they ended up coming back. Even the Treasury Secretary, Janet Yellen, came out going, hey, as a former Fed president, that's what they meant to say. And that was a whole thing at that point there. So yeah, you can kind of trust that there. So in other words, what they're saying is the pace of how they're raising rates that probably can slow down. We're not going to say it's going to slow down, but it probably could slow down, and we're thinking it may at this point. They were saying that. But, you know, no clear answer. Like he didn't give it to us, man. So a little bit of miss there. So the market's actually pulled back. I think a lot of you were hoping for that anyways, and hope that it continues. We'll see. This could ultimately just be a higher low in here, but for today, that's the aggressive kind of high volume across the board sell-off that makes you say, I'm not buying that right now, right? The freight train's going this way. I'm not stepping in front of that, right? All the volume, all the breadth, all that decision-making was going on that side. And so that's what you have there. Like it or not, that is what's moving the markets. Remember, we don't really care. You don't want to fight the market, right? So you ever look at something and you go, these guys are nuts. Earnings were horrible. That stock shouldn't be going up. Well, there's a reason it's going up. So your belief may be maybe against that. You go, I thought the earnings sucked, right? They missed their numbers or whatever you want to attribute to it. So you don't want to fight it. You want to look at it and go, why was the response this way? So that I can be better in tune with where everybody else is at. Because you're not going to move the market. I'm not going to move the market, right? We can move some stocks individually, but we're not going to move the markets there. So you want to be in tune with that for sure. Okay, so all that wraps up the Fed talk here for the moment. Remember, there will be another Fed rate decision, likely going to be 0.5% at this point, unless the numbers keep coming in strong. But that's where we stand there. S&P is on your screen here. We're back down now 20% year to date, so official bear market territory there. Every single sector was lower on the day. I'm going to make a little adjustment here and just tighten this guy up here. There we go. So you got a lot of weakness across the board. Every single sector was lower. It was one of those days where, hey, by the way, one of those days where you might be going like this. Oh my God, I need a towel. I ain't sweating, right? This is the joke towel we give to clients when they start working, getting a little worked up about the markets there. I don't have any clients actually at the moment that are super worked up. Maybe some on the borderline there, but soon to be, if you need a towel, you'll be able to get that from us there because we have an overabundance of towels and we have to pay to keep the lights on and everything. So we just got to promote the towel for a second, right? Anyways, I mentioned a second ago, every sector was lower. Well, in truth, every sector was lower today. However, every sector but energy is lower year to date. That's the only place with massive growth, by the way, 65%. Every other sector is down, and not just a little bit, down quite a bit there. You've got 7 sectors down double digits. Communication services being the worst. It actually almost made new lows today. You can see it on the chart there, about to fall off the bottom of the screen. And that's what that's the worst one actually there. Consumer discretionary almost at new lows as well. So there's discounts to be had out there when you're ready for the discount. I would maintain, and I can't tell you what to do, but I would maintain that this move today in the broad market and every individual sector and almost every single industry. Remember, the stock market goes broad index, sector, industries, stock, right? So almost every single industry is even at a point where you say, nope, I don't need to bet counter trend on that now. I don't need to commit large sums of money. First thing tomorrow morning, I sit on my hands and enjoy the little shopping spree of looking for what discounts there may be. I will also point out that growth stocks, they were the rough patch today across all factors. And when I say factors, I'm saying between value, index, growth, and inside of that, small cap, large cap, mid cap. So growth was the worst there. Small cap growth stocks took it the worst today. They were down a total of 3.7%. Small cap index down as well. Not quite as much there. Mid cap and large cap growth stocks all lower on the day, being the biggest losers of the day, by the way. Going over to the NASDAQ here, that's a decent loss, right? This is the weakest out of the group. I've pointed this out numerous times here. The NASDAQ a little bit away from new lows here, but it today, with this decline, makes the 1-month performance negative again, right? It was just going positive there. So by far the worst and toughest index there. If you have anything related to the NASDAQ and you notice a little extra pressure in your portfolio, it's going to probably be because of that. Now, tomorrow, if you're a client of ours, Wine and Wealth, Last week, Eric talked about the adjustments to 2023 numbers, what that means, what you can do. Tomorrow, I'm going to be talking about a handful of things. Remember, this is our class where we get a little geeky. It's private for clients, so I'm able to talk freely a little bit more. We're going to be talking about portfolio strategies as they relate to our portfolios here at Jazz, because that's going swimmingly this year. Very happy with that. RMD alerts, some new tactics there and things you might want to know about. And we'll talk about some interesting paths you can take that we're going to now maybe start forcing you to take in your personal finances. I've really come to that point where I'm like, we know money's going to get tighter. We all have to buckle down and figure out what the best path forward is. So going to be a little more tough on that. So that'll be tomorrow night in our Wine and Wealth. If you're a client, you can come join us. It may be a whiskey and wealth type night. I don't know. Sometimes these things get away from me. We've got bonds. Well, basically, I'm looking at 30 years right now, but all treasuries basically are comfortably over 4%. So, thanks to what happened today, you can see down here, we got prices moving lower. That means rates going higher. Could be an end to this last little rally that we've seen there now that we know a little bit more about what the Fed is thinking. You want some good news? I hope you like China. Good news, at least better than what we're seeing over here. Multi-day rally. I don't know. This kind of came out of nowhere here after being a little extended. I'm looking at the FXI, but you can look at the A shares as well. Oops. Come on, baby. A shares, I can type. There we go. You got a multi-day rally of at least 1% or more. So coming off of lows in a more aggressive way. Remember, Chinese markets are wildly more volatile than U.S. markets. So that's impressive, but it could be a lot more there. Just want to point that out. I was looking at these guys last night, following the Chinese markets, and I'm like, hey, look at them. That's actually doing all right now that that whole mess of kicking out their previous premieres and stuff is done. Very, very cool what's going on. The dollar, this basically put gold, stopped it right in its track. Remember, the dollar was starting to pull back. It was getting a little bit weaker, which meant good news for companies here. We went over the whole thing. Remember, we talked about companies that get a lot of their revenue overseas. I pointed out in their earnings where they were saying, we expect this continued strength in the dollar, which means it's going to be a Forex headwind. That was your drinking game word, right? Well, we said, if the dollar falls, now we know the next quarter would be better for those companies. We would know that before most people put that together. That's going a little bit tougher for people that have earnings overseas or do a lot of sales overseas, because that dollar whipped back today after the Fed announcement. And I keep kind of saying it just seems to refuse to want to pull back. Almost looks like it's going into a sideways range. We will see what happens there. What else do we got? We've got some interesting stocks in the news here, and I'm being brief with you here today because the Fed took up a little bit of our time. If you are an individual stock trader, and then I'll get to your questions here momentarily, I'll actually pop it out so I can see. You guys will see how this works in a second. Ta-da! There you go. All right, make sure I can be with you. If you're an individual stock trader, you had a handful of earnings come out that maybe you're involved in, I don't know, and they were all just blah. Like, ugh, not horrible, not great. It was just kind of like, oh, okay, not good, not great, whatever. EA Sports, well, you got to call them Electronic Arts, right? If you play the games, you know them as EA Sports. Not a great report for them. Ultimately, it was higher, but just slightly on the day. The issue with them continues to be what we mentioned last quarter, the slow pace of new releases. These guys make money by making mostly video games, putting them out there and selling the devil out of them, right? Besides FIFA and Madden, that's it, right? So their pace was really slow. And so everybody was looking at this going, give me something else. Tell me that the pace of games is going to pick up. Anyway, kind of, a little bit. The full year guidance gave us a little bit of speed up in the pace there, but yeah, just not great, right? Another one, Airbnb. I actually know a lot of people that took a shot on this during the IPO, a little overpriced, and now that's coming to be true here, but kind of just a blah report for them. Pretty basic, nothing really special there. Revenue was 2% above expectations. That's okay. That gives you an initial bump there. Earnings 17% above expectations. But remember, every company, you could make a spreadsheet. Every company has a metric or 2 or 10 that you look at. The easiest one, the example I always give you is for Netflix. subscribers in the US, subscribers overseas, subscribers overall. That's what people want to see. That's where the dollars are, right? Now, by the way, Netflix's next earnings is going to be obviously total subscribers, but how many of those subscribers shifted to the new ad-supported plan? So just a little heads up there. Anyways, off topic. Airbnb total volumes declined. Volumes for Airbnb mean the bookings, right? They don't do anything else. They're a sort of a clearinghouse for you if you want to rent out your house or rental unit or whatever you got. Total volumes declined, and the guidance suggested that that's going to get a little bit worse. Now, they got a little tiny bit of a pass initially because they look at the bookings that you have, stretch them out over the length of time they have bookings, and they say, okay, that's essentially almost guaranteed business because the cancellation rate's really low, meaning all those people that booked are very likely to continue to follow through with that and go enjoy themselves and do whatever. They can prove that by saying cancellation rates are actually decreasing. So I don't know if you guys care about this stuff, but the reason it was just kind of blah there is because they said going forward, volumes will continue to moderate slightly. In other words, we went from gangbusters. We're going to just pull it back there just a little bit. The backlog of bookings, okay, that helped them a little bit, but investors said, okay, fine. There's no reason I need to be a part of this. The economy's slowing. You guys are seeing maybe a slowdown in bookings and stuff. We'll come back. There's also a lot of competition out there. So that's Airbnb. All right, moving on. Who else do we want to look at? Oh, AMD. So AMD a little bit lower today. I think it would have finished higher, actually. It was a tough report for them, but a lot of that's kind of priced in. Right? They were really good about pre-announcing their earnings. Remember that class we did on that? Talked about pre-announcing earnings and how that works and why people do that. Growth is actually slowing in the semiconductor market. Not because there's less demand, right? We need these chips for everything we can imagine, but because the demand was there and they overpumped out a bunch of them there. So that growth rate, right, the pace of the growth, that's like the key word of the day. The pace of the growth was actually not as strong as we thought there. They have, I think the real weakness, if you're looking, this business can be boiled down really simply. They do have physical chips, they do have cloud storage, and they make chips for that as well. But they make stuff and they hope to make a profit margin. Right? So if you ever just want to understand them, they make stuff. The stuff that they make, me and you don't understand how these things work, but they make it. They need to make a profit margin. Their profit margin, unfortunately, was 42%. So the gross profit margin. Sounds like a lot, but that's the lowest it's been in like 10 years, so not good there. You want margins to be strong and strengthening into maybe an economic slowdown. If you're a business out there, you've got your business, you're like, okay, I've got high margins at the moment. If the economy slows, I can still keep busy just at a lower margin. I can tough it out. I'll make less, it'll be fine, but at least I still have business. You're starting down here, AMD, with these low margins. If things get weaker and the supply starts to increase again, where are the margins going to go, right? So think about that before you say, well, now's the time to dive into AMD. They just told us what's going on with their business. Humana, really the good earnings reports from today, or the response to earnings reports that were positive, came from the healthcare sector there. Just good for them, right? Better than expected earnings, revenues came in better. Their guidance was strong. But really what they were doing was they were saying the previous guidance that we gave, which was strong, we're going to go with that. So we're not going to change it. We're not increasing it. We're just going to go with that over there, and that's positive for them, naturally hitting a new high. So good for them. CVS, same thing. And we got to the end of that opioid settlement thing. We could put that behind us. $5 billion, I think, in total, 5.5, somewhere in there. The point is, anytime there's a class action lawsuit or a specific lawsuit against a company, that's okay. It doesn't tend to hurt a stock too much, provided that it's not monumental in size, right? It doesn't tend to hurt them. It does tend to cause the stock to fall a little because we don't know the number. You'll often find that once you know the number, even if it's stupid, like Google has a $2 billion settlement over in the EU, Apple just had one in the EU, well, the stock actually does better once we know the number, because now we can see, okay, they've got the cash for that. They can pay for that. They can, maybe they can, what do they call it? They can, instead of agreeing to it, what do you do when you go, oppose the case, right? And you say, I want a retrial, I forget the name for it. They can do that. That maybe saves them some money. Knowing the number is key, right? Wall Street runs on numbers. If we have a question mark in there because of a pending lawsuit, that's where the trouble is. And once we know that number, it tends to be just fine. You saw that with CVS today, and a lot of money, but that's despite that, that's what you got. And they're not paying the whole thing themselves anyways, but that's it. Okay, tomorrow, here's what we've got. We've got earnings from ConocoPhillips. Actually, a lot of energy stocks there. ConocoPhillips being one of the bigger ones. Marriott. Amgen's going to report. EOG Resources. PayPal and Starbucks Square. Those will be the after-hours reports there. If you didn't know, appeal, Chris. Thank you. They could appeal, but we still know the number. But appeal is the word that I was looking for. For earnings tomorrow, the bigger name is Starbucks. And Starbucks does not have a good record. Only 2 of the last 8 earnings reports did the stock move higher after the report. Now, their earnings reports, I don't know if they've dialed them in yet there. They beat half the time, they miss half the time. So I don't know if Wall Street's really dialed into what they're doing. Nonetheless, the stock tends to move lower. If you look back, just the last one, right there. That's your last one where it went higher, right? Other than that, you got over here, lower, lower. No, that's the second one. There's the second one that's higher. And then you got lower, and I can't see the rest of them. But 2 of the last 8 for Starbucks. So a tough one for them. All right, I'll take your questions if you have any questions for me, and then we'll get out there. You got a lot of that. Chris is right. A lot of that union troubles behind you there. I saw what they did to those kids up in New Jersey or New York, I think it was. Yeah. It's been a great run on AT&T lately. Expect this to continue. The bounce across the board. This comes from earnings, right? So you had AT&T, Verizon. Nope, can't see it. AT&T and Verizon coming out of earnings. They're enjoying that momentum. That's an extended momentum. You don't expect this to just duplicate itself. No way. You wouldn't want to make that bet anyways. And remember, if I could just go, off topic a little bit, it's because it's a risk to reward trade, right? You could say, I see the question on Roku, you could actually say there's a lot of reward here for maybe a little bit of risk. I don't know, right? You can't say that here because you have to enter here. Where are you going to get out if you're wrong? You would be guessing where you're going to get out. So your risk is like from here to here, and your reward is from here to here. It's the same size. It's a 1-for-1 trade. So on AT&T, the short answer is no. No. And I agree, Lucas. If they don't get bought out, I'm going to look real bad. I got a month to go, right? And I need them to get bought out for a lot of money. I should have just swapped it out with SQM. SQM, I said, was my close second. They killed it. I got 2 months. There you go. Thanks for that. Appreciate it. Thank you for that. China's cheap. Brazil's expensive. Yeah, if you're looking around the world, Brazil, I don't know what they're doing over there. They're killing it all year long. Not because of the election, but all year long they've been killing it. It was crazy. Inverse funds, this is like the 1 year that inverse funds as a hold, I can't argue with, right? I'm against them. For day trading, I'm all for them. Yeah, use them, of course. It's free leverage for the day. But this is the 1 year. 2018, creamed. 2019, creamed. 2020, right, well, maybe if you were around the virus, it's fine. Anything after that, creamed. 2021, they just don't work. But this is the 1 year with volatility off the charts. Yep, that's what they work well for. Oh yeah, that's fine. Yeah, I won't say that. I mean, yeah, of course, it could have picked any other stock that performed poorly, but I'm sure there's others that did worse. Of course, Meta, is one of them. SoFi, right? Yeah, SoFi is actually down a lot more. SoFi is down 10% today. Cool. Meta, we talked about Meta's valuation the other day. The problem is it just got whacked in the face. So yes, extremely cheap relative to its peers, the industry, the entire sector, really. But it just got whacked. The momentum, just like the market today, the momentum is to the downside at the moment. You don't have to guess the bottom to buy a fundamentally cheap stock, right? There's no need. It's not, I mean, it's cheap price-wise, but if you see a company, you think the value is underrated for the moment, or you find that it's a good value, then who cares if you pay 50 cents more or less, $2 more or less, whatever. You're in it as a good valuation. You're hoping up to enjoy a multiple of your valuation there. So I like it, yes. You can't step in front of the weakness. They got to shake it off, let the tide change a little bit. What do you think about getting some gold? Nope. I can't tell you no, but why? What are you doing? If the inflation hedge didn't work, what will work? Why would gold be worth more than $1,650 an ounce, $1,700 an ounce, right? Silver's a different story, but why would you get some gold? Daniel, can you explain the fees and how you guys work? It's actually all on our homepage. We don't hide anything. Our big thing is if you have a question, we'll just answer it. Doesn't matter. You can ask me anything you like. As long as I know the answer, I'll tell you. But we're totally transparent in that way. So actually everything that we do and everything is right on the homepage, what it costs. You can see how rich the company makes us. Yeah, I can't tell you no, but who did I just see the other day said something about, like, I can't tell you to buy the S&P, and they said something like that. I was, okay, that's different. Yep. The only thing to hedge against the market is Clorox. They had their earnings come out, and that would have been a poor hedge today. They had a rough go of it there. Their costs go up too. That's the bottom line with something like that. It's a consumer staple. It's not going anywhere. It's always going to be there, but occasionally their costs go up too, and they're no stranger to that. Yeah. You about the Amazon 105 calls? Okay. Well, so my kind of rule of thumb there is if you're going to buy a call, you buy the at-the-money call, right? You're already saving a bunch of money there. And Felicia, girl, pay your mortgage. Somebody put my number down. Her name's Felicia. She ain't paying her mortgage, and it's starting to kill me. I hope she can pay it. You buy the at-the-money call, right? The further out you go, right, you have a lower probability than just buying the stock anyways. So we want to keep your probabilities high. And I know when you look at something like Amazon, you see the lower price point of that $105 call, but I would buy the at-the-money call personally. If anybody knows, Felicia, that'd be great. It's just killing me. Day after day, they call looking for Felicia. I'm like, how much is it? Maybe, can I just pay it? Poor girl. Anyways, I will wrap it up here. Yeah, we'll wrap it up here. I will wish you a good rest of your day. We'll be back tomorrow to do this all over again. And thanks for watching. Thanks for hanging out with us. Well, it was kind of a fun show that we put together, and it takes a lot of effort to get it done, but always seems to be a good time, and I appreciate you hanging out with us. Adios.